Why do you have to pay Amex in full? American Express, Amex, cards were originally designed as charge cards, distinct from traditional credit cards. Unlike credit cards, charge cards lack preset spending limits and ongoing annual percentage rates, APRs. The fundamental reason behind the necessity to pay Amex in full is rooted in the nature of charge cards. They are not intended for carrying balances. When you use an Amex charge card, you're expected to settle the entire outstanding balance at the end of each billing cycle. Unlike credit cards that allow you to carry a balance and pay interest on the remaining amount, charge cards mandate full repayment. This characteristic aligns with Amex's initial concept of providing a financial tool for individuals who prefer a pay-in-full approach to manage their expenses. The absence of a revolving credit feature on Amex charge cards means users don't accrue interest on unpaid balances. Consequently, there's no APR associated with these cards. This financial structure aims to encourage responsible spending habits and prompt repayment. Not adhering to the requirement of paying Amex in full can lead to consequences. If you fail to settle the outstanding balance by the due date, late fees may be imposed. For each successive closing date with an unpaid amount, Amex may charge a fee, typically the greater of $38 or 2.99% of the overdue pay in full amounts. Additionally, paying late could result in the activation of a penalty APR, leading to increased interest rates. Understanding the rationale behind the pay-in-full requirement is crucial for Amex cardholders. It's not just a matter of policy. It's a fundamental aspect of how charge cards operate. By fulfilling this requirement, users avoid incurring unnecessary fees and maintain a positive financial relationship with Amex. What happens if Amex is not paid in full? When you neglect to pay your American Express charge card in full, you expose yourself to various consequences. Primarily, late fees come into play. For each subsequent billing cycle in which an overdue amount remains unsettled, Amex may impose a fee. This fee is calculated as the greater of $38 or 2.99% of the outstanding pay in full amounts. Late payments not only trigger fees but can also result in the activation of a penalty APR. A penalty APR is a higher interest rate applied to your existing balance and any future transactions. This elevated APR can significantly increase the cost of carrying a balance on your Amex charge card. It's crucial to note that the penalty APR is not a fixed rate and can vary based on factors like your creditworthiness. This punitive measure is enacted as a consequence of failing to meet the primary requirement of paying the balance in full. It serves as a deterrent to encourage timely and complete repayment. To avoid these repercussions, Amex cardholders should prioritize settling the entire outstanding balance before the due date. Timely payments not only prevent late fees and penalty APR but also contribute to maintaining a positive credit history and a good relationship with American Express. What happens if you only pay the minimum payment on Amex? While Amex charge cards require full monthly payments, traditional credit cards offer the option to pay a minimum amount. However, choosing to pay only the minimum on an Amex credit card can have significant financial implications. The minimum payment is a fraction of the total balance, typically calculated as a percentage of the outstanding amount. By opting for the minimum payment, you may meet the immediate requirement, but the remaining balance carries over to the next billing cycle. This unpaid balance attracts interest, and on Amex credit cards, the interest rates can be relatively high. One of the key consequences of making only the minimum payment is the accrual of interest on the remaining balance. Unlike charge cards, credit cards, including Amex credit cards, have APRs that apply to outstanding amounts. This means that carrying a balance results in paying interest on the unpaid portion, increasing the overall cost of your purchases. Moreover, consistently making only the minimum payment can have a negative impact on your credit score. Credit scoring models consider your payment history, and consistently carrying a balance may be viewed unfavorably. To optimize your credit score and minimize costs, it's advisable to pay the full balance on your Amex credit card each month. What is the minimum balance for American Express? American Express does not require a minimum balance to open an account or earn interest. This applies specifically to rewards checking accounts, where no fees are charged for maintaining a minimum balance. The absence of a minimum balance requirement makes Amex accounts accessible to a wide range of individuals, regardless of their financial capacity. However, it's important to note that while there is no mandatory minimum balance, inactive or unfunded accounts may be subject to closure. American Express, like other financial institutions, may take measures to manage account maintenance costs. Inactive accounts, where there is no financial activity or funding, may be closed to streamline their operations. Users should refer to the rewards checking account terms for specific details on account maintenance and potential closure due to inactivity. Understanding the terms and conditions ensures that account holders are informed about the requirements and can take necessary actions to avoid any unwanted account closures. In essence, American Express maintains a flexible approach by not imposing a minimum balance requirement, making their accounts accessible to a broad audience.